My name is Affaf Noor. I'm one of the expert tutors for Advanced Audit and Assurance. The video you're about to watch is on audit risk, which is a very important area that is always going to be there in section A of your AAA exam. We're going to focus on understanding the answering techniques. We are also going to talk about the very easy professional skills marks that you can get so that when you actually go for your actual exam, you're very well prepared to attempt questions on audit risk very easily. We will start off with a checklist of topics that you should be comfortable with. We will then discuss the common reasons for not being able to attempt these questions well in the exam. I'll show you examples of how this topic has been commonly tested in the past. We will discuss the answering techniques and we will wrap it all up by talking about how we can aim at getting the professional skills marks in these questions. I would recommend that you make a note of these techniques as they will massively help you in attempting risk questions in the AAA exam. With reference to the syllabus guide, the main topic that you need to be comfortable with is how to evaluate and prioritize audit risks and risk of material misstatement for a given scenario. The key word being evaluate and not identify only. By the end of this video, you would have learned how to differentiate between identification and evaluation. So you don't need to worry too much about this at the moment. The best place to revise this is from chapter 7 of ACCA Study Hub. You can read through the content to comprehensively revise the technical knowledge that then needs to be applied to questions in the AAA exam. Please remember, it is very important to make sure that your concepts are clear before you go on to attempt questions on the practice platform. So while you're reading through chapter 7, make notes of key points so that you can retain them and apply them to the scenario that is given in the AAA exam. Now to begin with, and I'm sure you know this already, but just a quick reminder that FR and SPR are assumed knowledge for AAA. You should have ideally studied SPR before you take the AAA exam. Inability to identify incorrect accounting treatment is one of the most common reasons for not being able to do well in audit risk questions. So I'll give you an example. If you don't know that for cash settled share-based payment transactions, the client should have remeasured the fair value of the liability at each reporting period. With any changes in fair value going to P&L, you would not be able to pick this up as a risk in a given question. While practicing questions, if you come across a risk that has an accounting standard that you're not comfortable with, please do ensure that you revise it before you move on to the next question. There are usually up to 3 marks available for each risk of material misstatement identified from the scenario. If you're comfortable with the answering technique, you should be able to manage your time and perform well in this area. We will be discussing answering techniques for risk of material misstatement using examples in detail in this video. I'm sure all of you do really well in an audit risk question if you were given unlimited time, but unfortunately, that's not going to be possible in the actual exam. Therefore, a well-prepared student who has sound technical knowledge should be aware of the answering technique and should have practiced extensively using the practice platform. And such students should be able to complete their exam on time. I've said this numerous times in other videos as well, but the easiest way to pass AAA is through practice. For this topic in particular, reading the question and then just reading the answer is not going to work at all. Ideally, your written practice should be time managed so that you can evaluate your ability to complete the question under exam conditions. Once you've written or typed up your answer, the next crucial step is to actively read the standard solution given by the examining team. Read the answer carefully, mark the points that you weren't able to identify, and understand the answering technique as well as revise your technical knowledge. The exam team in the syllabus outline has specified that section A of the exam will be set at the planning stage of audit for a single company or a group of companies. This basically means that audit risk or a component of our audit risk is always going to be there. In the exam, you may be asked to evaluate and prioritize risks of material misstatement. If the requirement states that you need to evaluate audit risk, this basically means in addition to risk of material misstatement, you will also get marks for talking about detection risk. From AA, you should remember that audit risk has ROM, which is risk of material misstatement, as well as detection risk. This has been tested just very recently as well. You may be asked to justify why a certain risk is a significant risk. You should pause the video for a few minutes to review and understand the requirements, as answering each element will help you get the technical and professional skills marks. So to recap, evaluate, prioritize, only focus on significant risks of material misstatement. And for the second requirement, justify why you feel a certain given accounting treatment or a certain given part of the financial statements could lead to a significant risk of material misstatement. We're now going to look at the answering technique for evaluating risks of material misstatement, identifying facts given in this scenario which could increase the chances of fraud or error in the financial statements should be the starting point for audit risk questions. I always recommend that you read the case study twice. The first time should be a quick read to understand the client and the information given. Once you're comfortable with the story in the case study, you should read it once more, and this time you should highlight the facts given in the scenario that could increase the chances of fraud or error in the financial statements. The best approach is to highlight these facts in the question and copy them as headings onto your response area. This would then ensure that you don't miss out on any risks that you have identified. As you start writing the answer, the first part of the answering technique is what you see on the screen right now, which is your comment on materiality. Now, please remember, you will have to talk about materiality in a bit more detail for additional technical marks that we'll discuss in just a few minutes. But you start off with commenting on materiality wherever possible. So some items would be material by amount or some might be material by nature. You then need to outline the relevant accounting treatment that should have been followed by the client, relevant being the keyword. Using the scenario given and the accounting treatment that you've outlined in the earlier step, you need to identify the risks in the given scenario, and then you can wrap this all up by talking about the impact on the financial statements. For errors, the impact would be misstatements, or a particular problem or a fraud in a deduction would mean understatement, overstatement. It could also be related to inadequate or missing disclosures. We are now going to discuss each element of this technique through numerous examples taken from the past exam. Remember, AAA is all about your ability to convert your knowledge into an answering technique and get the available technical and professional skills marks. I want you to pause the video here and note down the key points given. In the exam, I would expect you to highlight the key issues which are of concern to me as an auditor and copy them onto the response area for me to evaluate later. Now, just to summarize, once you've unpaused your screen, the client's year end is 30th September. They have licenses that can be used for a fixed period of time, which vary between 3 to 5 years. However, the management very cleverly is amortizing all of them over 5 years. You need to evaluate the risk of material misstatement, and we know after watching this video that this basically means we can get up to 3 marks in most risks as long as I follow the answering technique. So we're now going to apply the 4 steps that we spoke about earlier to this given scenario. Now, in section A, you would have calculated materiality using the upper and lower end of the benchmark outlined in the requirement. This is very, very important. Please make note of this. The exhibit where the requirements or the tasks are outlined would specify the materiality that needs to be based on either revenue or profit before tax or total asset, etc. Please do not create your own basis. If the requirement says use revenue, then use revenue. You need to stick to what's given in the question. You get 3 technical marks for your materiality decision. Your first mark is for calculation using the lower range of the benchmark. The second mark is for the upper range of the benchmark. And the third mark is a decision with justification on the amount that you'll be using. So this you would have done at the start of the briefing notes anyway, right? So for revenue, the lower range is 0.5%, the upper is 1%. For total assets, lower range is 1%, the upper is 2%, etc. The first part of risk of material misstatement is literally just the line that you see at the top of the screen. You would have gotten the 3 technical marks earlier. When you talk about risks related to intangible assets, all you have to do is write that one line, that the licenses recognized as intangible assets are highly material to the group. Please do not do a calculation. All you have to do is you would have justified maybe the upper or the lower range or an average. You're now for each risk simply stating whether it is material or not. We now need to look at the relevant accounting treatment and risks. It's important to remember that you need to explain the accounting treatment that should have been followed relevant to the risk identified. So there are no marks available for just recapping what IAS 38 says. The concern in this particular question is about useful life over which the intangible assets are being amortized. So you would go on to write that according to the reporting framework, which is IAS 38, intangible assets with a finite useful life should be amortized on a systematic basis over their own useful life and not a generic one because it seems prudent. So that's my accounting treatment mark. Ultimately, you need to explain to the examiner that you do understand that all licenses cannot be amortized over a 5-year period. That is too simplistic, as some of the licenses have a shorter life. The question states that the lives vary between 3 to 5 years. This could also be a means of earnings management because the client might be trying to minimize the amortization charge and maximize the profits. So an effective evaluation, particularly the link to earnings management in this risk, will get you a technical along with the professional skills mark as well. In terms of the impact on the financial statements, this incorrect accounting treatment would lead to an overstatement of intangible assets as well as profit. You can also talk about understatement of expenses, which is basically the same thing as overstatement of profit. So very quickly, we spoke about materiality. We discussed the accounting treatment related to the incorrect amortization. We got professional and technical marks for discussing that there are indications of management bias, and we wrapped it all up by explaining that assets and profit might be overstated due to this incorrect accounting treatment. Let's have a look at another example. So we're just going to put all of this together through another example from a past exam. I've intentionally chosen one which requires a bit more evaluation than usual. Once again, if you could please pause the video and make a note of the key facts given. The client's year end is June 2019. A factory was damaged in August 2018 due to a storm. This was before the year end. An impairment review on the building and plant and equipment has been performed and the details are given. So the storm was an indicator of impairment and they've done the impairment review. They've booked a loss of 210,000 approximately, and they've calculated and booked that. The fair value less cost to sell has been estimated based on the sales proceeds which could be generated from selling the damaged machinery. The value and in use, and this is important, the value in use is estimated based on the future sales which could be generated if the damage to the building is repaired and the new machinery is put into the factory. Very clever. We know this is completely incorrect. You are expected to evaluate the risk of material misstatement. Just a quick reminder, start off with a comment on materiality. They have an amount loss given as well, so we can use that. You have to outline the relevant accounting treatment for impairment. You need to identify risks specific to the scenario. We've picked up the incorrect accounting, and there are other risks related to fair value as well. And then we're going to talk about the under overstatement in the financial statements. Like I said earlier, you have to simply mention the carrying amount of the impaired factory is material. Or if you've used the impairment loss, you could, and if it's material, you would say the impairment loss that has been booked is material. So you get a professional skill mark for commenting on materiality across the risk question. The damage to the factory has triggered an impairment review, which has been done, very well done. However, the calculations have not been done correctly. Please remember, the cash flow projections for the value in use of the impaired asset should relate to the asset in its current condition, not after it has all been fixed. So any expenditure to improve the asset's performance cannot and should not be anticipated. So we're not talking about IAS 36 overall. I'm not talking about carrying value compared to recoverable amount. That part of the accounting treatment will not get you any marks for this question. The concern is regarding incorrect calculation of value in use, so that's what we'll focus on. In terms of the risks, the finance director's estimate of value in use is obviously incorrect because it's based on the assumption that the building is going to be repaired and new machinery is going to be purchased. The value in use is likely to be much lower than the director's estimate, which could basically mean that the impairment loss is going to be much more than the one they've recognized. So once again, we're talking about very specific risks to the scenario. There is also a risk that fair values are going to be determined incorrectly. Please remember, and you should know this from your preparation phase as well, that fair values typically are risky because they involve judgment and there's potential for management bias. Therefore, there is also a risk that the fair value has been overestimated, because if the factory is damaged and the machinery needs to be replaced, then a value of 135 may be over-optimistic. And eventually, your impact on the financial statements, because of the incorrect accounting treatment, your impairment loss is understated and your assets are overstated. So we can see that all we now need to do is combine our accounting knowledge, with our audit knowledge, keep an attitude of professional skepticism, and convert the risk into the format that you see on the screen to get the available marks. In addition to your technical marks and the professional skills marks that you do get for evaluating each risk, there are some very easy professional skills marks available in the risk question. Let's go through these one by one. If you've used materiality set in evaluating risk, you get a professional skepticism mark. So the markers are going to go through your risk answer and make sure you've used materiality for a number of risks, and you get your first professional skill mark out of the 10 marks in the case study. There is a professional skepticism mark available for identifying potential for management bias, but there's a catch. This has to be scenario linked. You cannot simply write, oh, this is a listed company, I'm sure they've manipulated the financial statements. That's not going to work at all. You need to look at the scenario in detail and look for specific indicators of bias. For example, maybe they have expansion plans or they've applied for a loan, and therefore there's a higher chance that the financial statements could be manipulated. Super easy. You can get up to 2 analysis and evaluation marks for prioritizing risks. The first mark is basically prioritizing risks based on significance from most to least significant. And the second mark is for explaining why. So if you think a related party transaction is the most significant risk, you'll have to justify why. Is it because it's material by nature? Is it because it's quantitatively material, etc., etc.? It could be significant because it involved a lot of judgment. It was a new transaction during the year, whatever your justification is. So 4 out of 10 professional skills marks, all of you can get in section A as long as you're following the outline that you see on the screen right now. Now, another requirement which hasn't really come up very often, but you need to be comfortable with, is when you're asked to justify why a certain element of the financial statements has been identified as a significant risk of material misstatement. I'm sure you know this already, but just to quickly recap, what do we mean by significant risks? We know that some areas in the financial statements are more risky than others. In order to evaluate if a risk is a significant one, auditors need to consider the likelihood and the magnitude. Likelihood means the probability that a misstatement would occur. Magnitude is basically the materiality of its impact. Items or areas could be material by nature, by amount, or by circumstances. Now, as an example, suppose an entity or a client is in negotiations to sell a business segment. Goodwill impairment is very likely to be considered a significant risk. Why? Because there's a higher likelihood of possible misstatement and a higher magnitude due to the impact of the inherent risk factors, which include subjectivity, uncertainty, susceptibility of management bias. So I looked at your goodwill impairment. I linked it to chances of misstatement being higher because there's subjectivity involved, for example, and then I classified this as a significant risk. In the AAA exam, please make sure the justification is scenario linked. We're just going to have a look at a short example to understand what this actually means. So for a given scenario at an audit client, they had a material amount of work in progress at the year end. Using this scenario, this is what a well-explained justification would look like. So all of this information was given in this scenario. I literally just picked it up and copy-pasted it and reworded it to justify why this is a significant risk. So I did my calculations. I saw that work in progress has gone up by 10%, which seems high as compared to the increase in revenue of 4%. So I got my calculation marks, by the way, for 10 and 4%, half a mark each, and I got my justification mark. Estimating the value of work in progress is complicated and it involves use of judgment. You need to look at percentage completion, you need to look at overhead allocation, etc. In the question, they had mentioned that the director who had done the estimation was new, and therefore I'm going to justify this being a significant risk by explaining that he may be unfamiliar with the methods used to value work in progress, or maybe he used a different approach to valuation, which would lack consistency as compared to last year. So the key point to remember for the AAA exam is, for inherent risks, significance can be considered in terms of inherent risk factors. So a particular area in the financial statements, if it involves complexity, subjectivity, change, uncertainty, or chances of management bias, then you could use these terms as justification for this being a significant risk. Just to wrap up, please remember, and I'm sure I've said this earlier as well, time-managed written practice is the key to passing AAA. You can revise your concepts through the study hub, and practice questions on the practice platform can be used to evaluate your understanding before you take the final exam.